Hello, everyone. My name is Zach, and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now, let's get started. Today, I'm going to be estimating how I'm going to pay $0 in federal income tax when I do my tax return for 2025 for the 2024 tax year. And then, after I actually do it, we can look back and see, was I right? Was I directionally accurate? I think I will be. And here's the math to back it up. All right, so this is how I think my tax return is going to look like when I do it in 2025. So we have right here, line 2B, taxable interest. I think I'm going to have a lot more taxable interest this year. And the reason for that is I'm doing a lot of bank bonuses. And I've also had a lot more money in cash this year just because I did basically a cash out refinance of my primary residence. I turned it into a rental property. And so I had a lot of cash on hand and I kept it in a high paying CD pretty much all year. So I think I'm going to have a lot more interest this year. So that's why I put 3,500. The next one is going to be my dividends, line number 3B. I think just from my taxable investment account, this is what it's going to come from. Should have just about as much as I had last year, which is around $1,500. So that's what I'm putting. And then I already did my Roth IRA conversion for the 2024 tax year. And this is the value of the Roth conversion that I did, 26,753. It is less than what I did in the previous year. And there's a good reason for that. It's because I want to keep doing my Roth IRA conversions because it actually helps me in a way because it makes my adjusted gross income like into this nice little level that I need it to be. Let's just say that. I'll leave it at that for now. But it goes under line 4B, IRA distributions. It is a taxable event whenever you convert money from a traditional IRA into a Roth, and that's the amount that I already have done for the 2024 tax year. So that's what's going to go on there. And then capital gains or loss. I think I am going to actually show a slight loss again this year as far as capital gains go, because when I made my withdrawal for my financial independence, the amount that I'm living off of my investments a little bit, current amount that I had was at a small loss. So I'm going to put 1,185. And the reason for that, which I mentioned in a previous video, is because I did tax gain harvesting in 2021, where I realized $55,000 of taxable gains. I reset my tax basis within my taxable account, my investment account. And so now with that new reset basis, I've been pretty much showing a loss in these current years or, a very small gain. And so I think it's going to average out to a small loss as far as taxes goes. And then when it comes to on cash flow profit, my schedule 1, which is my adjustments, in this case, it's going to be my schedule C, which is my small business. I'm not exactly sure how much it's going to be, but I think it's going to be at least $5,000 of profit shown this year. So add all of those up, and I estimate my total income will be somewhere around $35,568. And then this year, I will have the adjustments of my HSA and, of course, half of the self-employment tax that I pay. And the self-employment tax that I pay is going to be based on that profit. So it's going to be 15.3% of that profit. So 15.3% of 5,000, and then half of that should be the amount that I get to take as a self-employment deduction. And we'll take a look at that real quick. So this is how much I would pay in self-employment tax. This is separate from income tax. If I had $5,000 of profit, 15.3% of that is $765, and then I would be able to deduct half of that, which is $383. Now, take a look at this real quick. The Schedule 1, which is going to be my adjustments that I estimate. My HSA, I only am going to be able to deduct $4,150 because currently this year in 2024, I'm the only one who has an HSA eligible plan. My wife has a different plan this year, so she's unable to contribute to an HSA. And so that's why it's at $4,150 this year. And then there's that half of the self-employment tax. So that's why I have $4,533 of adjustments. Come back here. So we have our adjustments, subtract that from our total income, and our adjusted gross income is going to be $31,035. Then after that, we get to take our deductions, which is, for me, it's going to be the standard deduction. And this year it's $29,200. And then the QBI deduction, I just pulled this off of a calculator because the QBI deduction, while I guess it's easy to understand, the way you actually calculate it is kind of complicated. So I just inputted this into a calculator online and I got this number. So it's hopefully directionally accurate. So $929 is going to be based on that $5,000 of self-employment income. And so add those two together, I'll have $30,129 of total deductions, and I can reduce that from my adjusted gross income. So I'll only have a taxable income of $906, of which, as you can guess, I'll fall into the lowest marginal tax bracket, which would be 10%, and that would be $91. So let's take a look at this tax table here. This is for 2024. This is what we're going to be paying our marginal tax rates. So for me, as long as my income was under $23,200, my taxable income, remember, it's going to be the 10% marginal tax bracket, which you can see it clearly is because it's only $906. And the way that I'm going to eliminate the rest of that tax bill is the same way I did last year, and that is with the saver's credit. Because I am financially independent and I still have a small amount of earned income, which is that self-employment income, the on-cash flow profit, I am still eligible to contribute to an IRA. And what I do is I contribute a little bit to that IRA so that I can qualify for the saver's credit. Let's take a look at this 2024 saver's credit, by the way. I will fall into the 50% category because my adjusted gross income will be less than $46,000, married filing jointly. The adjusted gross income, you can see right here, is $31,000. And so I fall under that umbrella there. So half of whatever I contribute would be a tax credit up to the total amount. So in this case, I would only need, like $200 because half of that would be $100 tax credit. So that's what I'm estimating that I'm going to be paying only $0 in federal income tax. I think it's going to be pretty easy this year for me, considering, again, I don't have any kind of W-2 income, and also considering that the amount that I did for a Roth IRA conversion is a lot less than I did in the previous year. So my income is going to fall right into that range where it's going to be pretty easy to not pay any federal income taxes. That's what I'm estimating. We will see what actually happens when I do file, and I can't wait to make that video. And by the way, if you want to have a second set of eyes, my eyes, take a look at anything that has to do with your taxes, I think maybe with all the stuff, because I'm a nerd when it comes to taxes, I think all the stuff that I've learned and researched, I might be able to help you out with your taxes. I might be able to save you a few $100s. I might be able even to save you a few $1,000s. So if you're interested and you want me to take a look at something to do with your taxes, feel free to book a consultation with me at oncashflow.com/consult. I have all the information that you'll need there if you're interested in booking a consult. And it doesn't have to be only with taxes. It can be with anything that you want it to be. I'd really appreciate it if you just went to that page and took a look at what I have to offer. Thank you so much for watching this video. I'm Zach from oncashflow.com, and I hope to see you next time.